Hey, this is Diggy here from ForexHabits.com. Today it has just turned to Monday, 26 November 2012, and I'm here just to do an analysis of a few currency pairs and maybe some market indices. Now this is the Euro US dollar on a daily chart. Last week is what we can refer to as a holiday market reversal, where there was a big international holiday, Thanksgiving for the US on Thursday. And what usually happens in these kind of holiday weekend weeks is that the trend reverses. So the trend's been going down for the last weeks already. We had this holiday reversal and we had a massive rally in the last week. You can see if we put this to a weekly chart, we were just going down, 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 down. We had this big up week last week with a holiday reversal, and the short-term trend seems to have changed to the upside. And we will very likely head up towards this horizontal resistance and the 100 exponential moving average on the weekly chart, which is once again at around 131.60. But however, on the short term, I do feel that we will head down and have a bit of a pullback before going long. So we're going to trade that to the downside, but we're going to look for an entry point hopefully somewhere tomorrow or Tuesday after a pullback to go long on the Euro US dollar. Now, the reason why I drew this horizontal line here kind of at the top of last week, which was Friday, the high at around 129.93, this has proven to be a support and resistance line over many areas throughout the last months. If you look at how many points it just touches in this area, and if you look on the 4-hourly chart and the 1-hourly charts, the price is rather overbought. So that, together with the strong resistance and support level from which it bounced, it is likely that we are going to head down anywhere between 129.40 and 128.80. Now, right about this level, I already published a blog post on my blog at ForexHabits.com to go short at around 129.70, which is this area, stop just above 130.05. Just to be sure, in case there is a little bit of a spike through this level, 130.05 should be safe. We do a short trade to the downside to try and catch that dip. If it doesn't work out, that's okay, because we always trade with a small percentage of our account, so even if we get stopped out, it does not cripple us for further trading. Now, if we do head back towards about the 21 exponential moving average in the 4-hourly chart, or this horizontal level about here, 128.80, I would be looking to go long anywhere between 129 128.80, but I would publish an update when it gets to that level to see if it is worth taking that shot right there, or if it is still looking like it's going to drop further. What I have noticed is that at the point of a cross between the 50 EMA and the 100 EMA, that is actually a temporary reversal in the trend. So in this case, it crossed to the upside, and exactly at this point, it should be a bit of a high, an exhaustion in this trend. It should pull back and then continue higher. So that's the Euro US dollar. The Euro Japanese yen, we can have a look at that. We also had a massive rally in the last week, and what is interesting is we've rallied up to the 100 exponential moving average on the weekly chart, and I actually called for that to happen a few weeks ago when it was near the 100 kind of mark, and it looks like we're going to break through there. We're going to head higher. We're probably going to head to this next target, which is around the 111, somewhere around there is very likely where we're going to head. All indicators on the weekly chart are positive. All indicators on the daily chart are positive, and although we have had a bit of an extension and we've gone up pretty quickly, Euro Japanese yen does have a tendency to do that, and if we would drop back, the maximum that we would drop back, I'd assume, is this horizontal resistance, which is at about 104.60. If it does happen that there is a sharp correction in the next week and it does head down towards this level, that would be a buying opportunity and a time to go long. But once again, I would publish an update on that once the price action gets there. Let's have a look at some indices. The S&P 500 chart, which has dropped quite a bit in the recent weeks. Last week, as the same with the currencies, we had a huge rally and we bounced straight up from just under the 50 exponential moving average to above the 21 again on the weekly chart. And so it is looking like there is going to be more upside. We're probably going to head to at least this top here, maybe create a kind of head and shoulders, which is the level of about 1427. If you look in the daily chart, right now we're still stuck in between these kind of averages, but the MACD histogram is positive. The RSI has crossed above the 50 line, which is bullish, and the stochastics are still pointing up. However, we have still this trend line at which it is just under. Once it breaks through there, if it does break through there, it's going to head probably towards the 1430, which I said, somewhere around there. So we'd be looking to go long if we can, somewhere between 1395 and 1390 if it drops down there tomorrow, and that chance should be pretty big. Now if we look at the Nasdaq, same situation. We dropped down quite a bit, almost down back to the 100 exponential moving average on the weekly chart, and then we had this huge rally week last week. Now if you look in the daily chart, the indicators are positive, but the price action is still under the 100 moving average. Now remember what I said with the Euro US dollar analysis at the beginning of this chart on the 4-hourly chart. When the 50 EMA crosses through the 100 EMA in a trend, it is usually a sign of an exhaustion and a short-term reversal. So we can see that again. This is a daily chart in the Nasdaq. When the 50, the green one, crosses through the 100, the pink one, it is usually a short-term bottom at that exact point of the crossing. So you can see where it crossed here. It's one candlestick off. One candlestick off the exact low, and from there it just reversed to the upside. And that's exactly what happened. Now we can expect further rally since we have kind of crossed through this trend line here at the moment. But like I said, as with the currencies, as with the S&P, I do expect a pullback in the Nasdaq before we will continue to head up, and that pullback should be somewhere between 2610 and 2605, somewhere back to this trend line and this horizontal kind of level here. So once again, if we do get that drop tomorrow around 2610, we want to go long on the Nasdaq with a short stop below 2595. That's a 10 to 15 point stop that you need to consider. Once again, when you trade, do not risk more than 2 or 3% of your whole account on a trade. Always trade with a stop loss, because you're in this from the long run. Even if one trade is a loser, even if 2 trades or 3 trades are a loser, you still want to have more than enough of your account available to trade with. You're in this for the long run. Losses are part of the game, but trade with your stops. Keep your emotions out, keep your analysis good, stick to your technical analysis rules, and continue watching these videos that I put out for you. Visit my blog at forexhabits.com or subscribe to this YouTube channel to be sure that you get these updates every time I do a video. I'm going to post the trading recommendations from this video below this video in the comments, and if you like what you see, please give this video a thumbs up, leave a comment, share it with your friends. The more people we can help to become better traders, the better it is for everyone. So, until next time.